Sorry guys, I lost such a great video that went out. It just didn't upload, and I'm so disheartened about that. So really sorry about that. This is going to be a shortened video. Let's try keep some of the essence. Man, I'm so upset. Let's move on. Let's move on. All right. So basically, as I made mention to, I did not want to trade this environment. When price came down, I knew that it was going to be something to watch because of that candle over there. It's a strong push to the downside. So we put that down and then it regressed. The eager would have gone long over there, but that's just not strong enough of a return for me. And I just kind of stepped back from it, right? And I said, let's just wait to see what happens. And then bang, it crashed on in. So yeah, there's so much I want to say, I suppose. So let's just start over here. If, for example, you were overly eager and you thought the market was going to turn over here, then the stop loss would have been hit over there. If you then revenge trade did and saw price go from there and you thought, let me go long over here, you would have had another stop loss crash on down. So this is why I don't trade dicey market setups. I need to get confirmation. And there's power in that, right? Because of this really swervy start over here, which is basically those are the same kind of thresholds, those are the same thresholds. So if you got in over here, you would have been spooked out to see price action return to your entry and probably into some loss. And that takes a lot of patience of going short to see that. So you may have closed over there, then gone long to go in with what you think is going up, boom, to hit your stop loss. Alternatively, over here, if you got in, let's say at that threshold, and then seen it go against it, and you would have held tight, you would have seen it come back over here to get into finally break even to see it go against, maybe just emotionally just over it, and then close the position, boom, to have it go towards the short. So what I'm trying to get at is emotionally is not for, I mean, trading is not for the emotionally weak. And this is why I stay out of such setups, right? So that's, again, it's the method behind my madness. You got to operate with structure. You got to operate with a rule set to avoid this sort of thing, because a lot of guys are going to see this one candle down, rushing down, and then get super excited about it. And then the FOMO and trying to catch it and emotionally irregulated and reactive and a whole bunch of stuff. And you don't, for those guys, they don't deserve the profit. The person who deserves the profits, and I stand by what I said about this transition, but just to prove a point, the person who deserves the profit is the person who gets in ahead of time based on correct structure, based on a correct rule set, the power of patience, hanging back, being strong, understanding what it takes and why. Again, going by rules, going by structure, then sitting in, and then bang. That's who these big candles belong to. It's those with the power of patience, but not only the power of patience, but the power of the earned power of patience, right? That's power through acknowledgement and understanding and foresight, predicting the moves well before they happen and with good reason as to why they happen. For example, as I did over here and the massive one beforehand, this was turmoil. I didn't set down any target zones over this duration. Same thing over here, no target zones as well. And this is for this reason. It's you got three options in trading. You can either go long, you can either buy low, sell high, go short, which is buy high, sell low. It's called shorting a market to go bet against the market, or you can hold. Now, my strategy has the power of when to buy, when to sell, but also when to hold, when to sit back. So for those who suffered from losses, you'll know that now, because you didn't do the third option, which is hold, your account is now worse off, which means you got less to work with because you didn't make the positive trade, which is a non-trade. As I made mention to, I'm not interested in this. I don't have to worry about this big candle because I know that there's the next transition, the next transition. There's thousands of transitions to come. Bitcoin's not going anywhere. right? So Bitcoin dies, I'll go to one of the other 5 markets that I love. So it doesn't really matter which market it is. It's just the fact that there are transitions in them, and that's another conversation for another day about correct portfolio management through selecting the best non co-integrated pairings. But again, that's not a conversation for today. So there's all of that, right? So that's the trader's journey. That's the mental turmoil that you have to sit through as a trader. So if you can't, if you're someone who's not able to facilitate the emotional requirement to battle through that sort of stuff, it's been a hard slog for a while. So if you haven't got the emotional ability to handle that, then perhaps look at doing something else. I mean, maybe you want to be a traffic warden, a professional dog walker or something. I don't know. I'm going with that, so I'm going to move on. For the MTOPS students, you know about the zero 0.5 scaling. I've adjusted it. Again, this is low impact to me, so I was lagging on being proactive, but I've adjusted the zero 0.5 scaling to arc 2, and it seems to be a good fit. You can see the kill zone story. You can see how it regressed along the 1/2, pulled itself up. I can do a bit of nudging over here, I suppose, just to make it a little bit neat, but I think I'm wasting time if I do that, but you get the idea, right? So it goes over here, gets resisted or course corrected at this alternate 1/2 line. So that's the 1/1, 1/2, 1/2. So alternate 1/2 line, then pop down for a little dance here at arc 2 again. So arc 2 dance, arc 2 dance, and then regressed on the 1/1. Did a little bit of a fake out for those who were trying to go counter trend, and then pulled up arc 3 and said, guess what, markets are smarter than humans. Bam, down to the 1/1, and look where it is again, just stopping there. I can get a little bit cleaner in terms of the interaction of where it all fits together, but I don't want to get pedantic over it. Again, this is low what's the word I'm looking for, interest, relevance, whatever, one of those words. Low stakes with transition for me, so I don't have to get pinpoint accuracy. I just wanted to finish off, base itself, get another transition to the upside, see whether or not that's worth getting into. All right, so hopefully this video was still packed with value. If you have any further questions, reach out to me on one of the social medias. Telegram is my favorite. Find my handle on one of the profiles, ask the question, see if you can roll. If you want to advance your trading, now is the time to do so. You can do what I do, and that's something you want to do. Again, this is 7 years worth of getting 7 years worth of getting kicked in the ribs through being self-taught in all the directions, and you can fast track 7 years by just investing in the course, understanding it within the first few days or few weeks, and within the first year you fast tracked beyond 7 years into a duration of under a year. All right, so you can learn everything I've learned within that period of time, and then maybe I don't know what you'll do with your future, because you've got an additional 6 years on me. Because I think you get the point there. My brain's mush. It's Friday afternoon. I'm gonna go enjoy my weekend. I hope you have a great weekend yourself. I'll see you in the new week. Ciao for now.